Rahul Magan is Group Chief Executive Officer, Treasury Consulting and also a venture capitalist. Now standing at 2:30, we're going to be shooting a pretty important video about Yes Bank. Well, before shooting this video, I'm very pleased to share that SoftBank investing $500 billion in Treasury Consulting LLP. I hope that should surprise you, right? You should be very happy that SoftBank is investing $500 billion in Treasury Consulting. But why are you raising? Why are you raising your eyebrows? Because this news is not right. Then this is right. This is right news. Few weeks before, a bank who went till the last stride of the life to get the capital got nothing. The co-founder Rana Kapoor sold almost 99% of the stake, and God knows where he is. Maybe he is, by the time we are shooting this video, he might be in the London. You understand why London? Now this bank was rejected by Microsoft, family offices, and now a person who is the CEO of Yes Bank, Ravneet Gill, giving a statement. And please look at the statement, what he actually gave in the public domain. He said, Yes Bank has received offers for fund infusion of close 3 billion from the various players like private equity and domestic mutual funds. Today we got another news that one of the credit rating agencies, politically or non-politically, reduced the ratings of Vodafone to one level below junk. And mutual funds are now shivering because they are having substantial exposure in Vodafone. God knows what would happen. Because we know that we have a one corporate house who is before Vodafone, so that Vodafone quit, legally or not legally. But here Ravneet Gill is saying that domestic mutual funds have surplus money to invest in Vodafone. And can I have the name of that mutual fund, Mr. Ravneet Gill, please? Let me know. Besides that 1.2 billion binding offer, the bank has also received from the CIS private equity players and two domestic mutual funds of a further 1.5 billion investment. You know, few days ago, there was a report came that if somebody invests 1.5 billion in Yes Bank, actually on the interbank chat on Reuters, he would get around 50% stake of the Yes Bank. And one of the participants of that chat said that Reserve Bank will never allow such transaction because in a one shot, you would be the owner of more than 50% of a bank. And today another news came that DBS, Development Bank of Singapore, India, is looking for a strategic stake, over 50% stake in, Yes Bank, and they're willing to invest a considerable amount. But later on, before the day ends, DBS said that no, we are not going to invest anything, so it's just a pure humor. But the game starts here. In a conference call with the analyst, Ravneet Gill, the managing director and the chief executive of the Yes Bank, said that the fresh capital would be coming by December, $1.2 billion. The binding offer of $1.2 billion come from North American investor. Can I have the name, please? But who cares? No one cares. We feel it is not appropriate to just clean up the books. The bank should likely to raise capital, he added, adding that the bank was open to giving a board seat to the new investor. You have to, because you do not have the funds. The bank is in dire need of the capital to not only provide the backed asset but also for a common equity tier ratio which stood at 8.5% against close to the regulatory requirement of the 8% and so on and so forth. And I hope you would know that this quarter they registered a loss of 600 crores. 600 crores. Now there is page number 6. Please read the interview carefully. Now the question is that India is a country when anyone comes in the media, anyone gives any statement. Stock market went up, and God knows whether there is an insider trading or not. I have no trust left on SEBI, especially after Infosys scandal. People never questioned Ravneet Gill that few weeks before there was no one who was willing to give anything, but now how come all of a sudden he got 3 billion? He said it's a question of December. Let's wait till December. Now what is the moral of the story? The moral of the story is that the data which is coming and the way our data is being presented by the media is actually fake. Now if I would be an author, what I would have presented that, I would have presented in a very appropriate way, and I would have raised the question. Now this is one yes bank. Let's talk about Flipkart. So see Flipkart. If you are a normal investor and what you do, you just look at the heading and you will feel happy. Flipkart losses plunge, revenue jumps in financial year 2019. Now let's see that. E-commerce major Flipkart witnessed a 63% decline in the losses and a 42% jump in a consolidated revenue in 2018-19. According to regulatory filing by Singapore Holding Company and our respective platform paper.pc. The Bangalore headquarter company had reported revenue of 43,615 crores, around $6.14 billion, but the game yet to start. The company losses fell from roughly 47,000 crores in financial year 18 to 17,000 crores for a financial year 2019 owing to the sharp decline in expenditures. Hold on. Expenses came down to 60,000 as against 77, which means a decrease of 17. In the previous year, though, it was mainly because of the reduction in the financing cost after the company got acquired by the Walmart. It means previously Flipkart was an independent entity. They were raising a sufficient money from the market, but now they have a player which is Walmart. Actually, why a player? Walmart bought Flipkart and they are pumping a substantial money in the Flipkart. Since they are pumping the substantial money in the Flipkart, it would be basically treated as an equity, not as a debt. So since it is treated as an equity, then the finance cost will reduce. That's a fact. But the moral of the story come later. Okay. For example, just the employee benefit expenses. The decline in the expenditure is attributable to the steep decline in the finance cost. The decline in the expenditure is attributable to the steep decline in the finance cost rather than any overall optimization in the operating expenses. The decline in the expenditure is attributable to the steep decline in the finance cost rather than any overall optimization of operating expenses. Finance cost comprised a large part of the Flipkart expenditure 2018, largely attributable to the accounting treatment of convertible securities. And I give in writing that we need to see this accounting, how the accounting is going on. But is that companies in public domain? Is that books is in public domain? Are the platforms giving that information in the public domain? Then God knows what is happening inside. Nobody knows. Let's move further. Now big question. For example, just the employee benefits expenses of Flipkart have shot up by 58%. Approximately 4254 crore since Walmart took over the company. Now last year Flipkart growth in the revenue was 50%, 50, and this time it is how much? It is 42%. This time it is 42%. It's a healthy growth and not something one should not be happy, but the losses are still a cause for concern. Now please note, very carefully. Now look at that. Paytm e-commerce, which is Paytm Mall, has narrowed the losses in fiscal year 19, even it expanded revenue by 25%. to 968 crores. 968 crore losses is nothing. It is nothing for our media. In the period under review, the e-commerce firm owned by Paytm reported a net loss of 171171, which is 34% lower than the last fiscal year, bringing title control over to expenses. Now, if you look at two news holistically, now one news is about the Yes Bank. Like I am sitting at airport, office, anywhere, and this is a newspaper, and what I see, Yes Bank gets $3 billion offer for investment. I would be very happy. Very good. Flipkart trim losses in fiscal year, revenue of 42%. Very happy. You know, during when I was MBA, there was a statement that I learned from my international professors, which is paralysis of analysis. Our media actually made paralysis of analysis. Now, our media first decide how to present. They present in such a way that most of the people feel that we are actually on the Mars. But when they wake up, they will get to know, no, you are on the moon. And when they come to the earth, they realize that they stand nowhere. So our media is actually doing a very important job, because the analytics part of the information, which is very important, the analytics part of the information is completely missing. And not only it is completely missing, the way you present it is actually missing. Now in these two cases, which I say the Yes Bank and Flipkart, in the today's newspaper, I would have used the pie chart. Rather than giving in English, you should have used the pie chart. Now the newspapers are never short of tools, and hopefully they are not never short of the talent also. If you give a pie chart, this would give complete holistic information about the company or a product at a one go rather than reading. But I am reading every one business newspaper in a day, the newspaper might not like that. To cut the long story short, we need to remember one thing very carefully, that the way our media present the things is actually not the right. They present in such a way that a ugly look story start looking rosy, a rosy look story start looking very rosy, and very rosy, just like Bhavesh Agarwal, looks very rosy. No one ever questioned Bhavesh Agarwal till now that if you pledge your shares and then buy back and then re-buy back these shares, how come you turn out to be a 10 billion company? No bloody media is dare to challenge Bhavesh Agarwal and asking that if the WeWork business model is failing, they end up having 46 billion more plus 46 more than 46 billion worth of lease agreements which are subject to renew. And now SoftBank is putting roughly $9 billion from their pocket, and God knows, and you know what had happened with the SoftBank recently, Public Investment Initiative conference at Saudi Arabia. No one ever questioned oil, rather his valuation is growing. So we have actually reached a level when the business newspaper are nothing but waste of time. You only read business newspaper to get small understanding, rest you have to depend upon the Bloomberg. With this, we thank you very much, and I am very thankful for the media that they presented the information in that way, because when our business channel will get launched in December 2019, then we are going to be presenting the way newspapers should have been presented. With this, we thank you very much. You know my mobile number, which is +91, an Indian code, 9899242978. You know our fixed income platform, www.fixedincome.global. Have a great time and talk soon.